All right, everyone. Big news at the time of recording this happened yesterday. And I just want to open up the lines of communication and just talk about it, especially the fact that it's taking place in the marketing automation space. Probably the biggest acquisition news for small business marketing automation software. I just recently recorded a podcast with the co-founder of Keap, which just got acquired by a company named Thryv. And in this podcast, we were discussing how instrumental and impactful they've been in creating this marketing automation space that has paved the way for all of these other platforms to really grow and achieve a higher valuation than them, honestly, when you think of the MailChimps. But the most important piece is, what does this mean? What does this seismic shift in the market mean to the competitors, mean to the company itself? And I am no expert. By no means am I any expert at all of the financials and everything that goes into acquiring a company, evaluating EBITDA and all of those financial terms. I'm aware of a lot of them. I don't know what they all mean. So what you're going to get here in the next few minutes is I'm just going to go through the public offering or the public announcement of it and just go based on, not reading too deep, but just based on the information that's placed in front of us. All right. So when I first read this, I was surprised because it came at a time where I don't think anybody was expecting it. In fact, I heard that the Keap community was kind of up in arms, like, "Hey, what's going on? What is this?" But this is where I found it. The 29th, October 29th, Thryv Holdings announced a strategic acquisition of Keap. All right. Now, this is expected to establish industry leadership with a total SaaS revenue to exceed $400 million. That was not there yesterday. So the story is developing and they're continuing to add more details and color to this. But just look at this. This has changed even since yesterday. But they were talking about how Keap had an 85 million 12-month run. Here it is, the overview. Okay, so the total transaction is a value of 80 million. All right, paid in cash. Cash money keeps getting 80 million. It's expected to close in Q4, and Keap generated approximately 85 million of revenue during the trailing 12 months through June 30th. So they reported 85, sold for 80. So just basic mathematics, they did not sell for at least 1x their revenue. Their reported revenue, right? Which we often see SaaS companies sell at a multiplication factor, or evaluated at least at a factor much higher than what they currently generate in revenue. So to me, that's my first sign that I think things were perhaps worse than what they appeared with Keap. Quick backstory. When I was at LeadPages, there was a time where we were transitioning from some old technology that the company was built on to new technology to enable drag and drop building and all of that. Now, at the time, ClickFunnels, the competitor, came in and they were like, forget not being able to drag and drop as much as you want to. And LeadPages really trailed slowly to make that adjustment and lost a ton of market share and never got it back. And I think something similar is happening here. There was a time where Keap was, Infusionsoft at the time, was owning the market. And then, and Clay talks about this openly. I'm not breaking any news here, but there was a time where they let that slip. And they got away from the things that made them great. Maybe there was some tech debt that they couldn't truly turn around in time. But we saw with the rebranding of Keap, this effort to revitalize and restructure and have a new perspective and new approach to the marketplace. A lot of consultants were excited about it. There was a lot of good energy around it, a lot of confusion with the name switch. And I think that it was just too much. I don't think they could overcome. You have competitors like Go High Level that are killing the market right now. I mean, just grabbing market share by the boatloads. It's just a lot more competitive, and it's tough. It is tough to see in essence a giant fall, right? And it's business, things happen, but to see them get acquired for 5 million less than what they reported in revenue that's tough. That again lets me know things were probably a bit rougher than they were projecting. So if I were doing business, having some contract or sponsorship with them, would I be concerned? Yeah, absolutely. I would need to hear from Clay himself, and I believe he'll probably step down and maybe be on the board of advisors. That's common for acquisitions like this, but extremely from the outside, did not see it coming, and still kind of measuring the impacts of it. But check this out, everyone. Business Wire also posted this, and I had it highlighted here. Check this out. Let me zoom in some. I think I can zoom in. Look at this. It says they announced today, Thryv, for an underwritten public offering of 75 million shares of common stock. All right. In connection with the proposed offering, let me see if I can do it like this. All right, there we go. In connection with the proposed offering, Thryv intends to grant the underwriting a 30-day option to purchase an additional 15%. So that just means 75 million, and you can give us more money if you want to, right? Thryv intends to use the net proceeds of this offering to fund the purchase price for the previously announced acquisition of Infusion Software. So this means not only are they getting Infusionsoft / Keap at a discount rate, they're not even coming out of pocket. They're like, hey, look, let me sell these shares, get the cash to pay this off. And if one were to look just a little deeper, I found, where is it? It wasn't in Yahoo. I did find an article. Here we go. Where is it? That talked about, this is Thryv. Okay, this is Thryv's website. Hold on. Let me find this article, everyone. Okay, here it is. So check this out. Let's just read through this. Again, I am not in any way, shape, or form a financial expert of things of this magnitude. I'm just going by the limited understanding that I know and opening up for us to have a conversation. If you want to drop some knowledge in the chat or the comments, wherever this is posted, I can learn. Okay, I can be taught. So the revenue expected, SaaS revenue, this is from Thryv. Okay, so they're reporting the company exceeds third quarter SaaS revenue and SaaS adjusted EBITDA guidance. So this is Thryv reporting their unaudited Q3 performance, right? These are the unaudited results, so they're just saying it, no oversight over it. But look, their SaaS revenue is expected to be in the range of 86 million to 88, which means whatever I just paid for this, I'm gonna get it right back. I'm gonna get it right back. To me, this is saying there was no risk from Thryv to just buy this software. And if you're familiar with the Thryv software, which I am not, I just looked them up yesterday to understand it. They're more traditional marketing. Like I think they're owned by the Yellow Pages. They've got like reputation management, things of that nature. They're not the more modern SaaS that we see for marketing and sales automation. So I think, to me, when I was reading through their portfolio of products, they're real light on the marketing and automation side. So I believe this acquisition was all about the technology and the customer base for Keap. And it's not going to cost them anything. Look at this. They're expected to raise their SaaS gross margin. Again, this is all for their SaaS offering. I think they probably have others tools and software in their portfolio, services maybe, but this is for their SaaS offering, and it's expected to be in a range of 69% to 70% compared to 64%. So their gross margin for their SaaS is going to go up about 5%. Now look at this. They are expected to be in the range of 95 to 97 million, which includes, this is their net income loss, and most of it includes a non-cash goodwill impairment charge related to our marketing services segment, compared to 27 million in the prior period. I have no insider information. I don't know exactly what this means. Again, limited understanding, but with what I know is that they've got some goodwill impairment charge, which means there was, and this is not actual, it's a line item write-off of something that they hoped, like maybe a previous acquisition that didn't go well. So they're planning on writing this off. Either way, what you see is two companies hurting, and I guess two negatives hopefully make a positive when they come together. But Keap was clearly bleeding out. Clearly bleeding out. It looks like Thryv saw an opportunity to expand on their SaaS offering in the space to really be able to make an impact, and took advantage, and hopefully they'll do right by the software that they're purchasing. And is there cause for concern? Absolutely. There's cause for concern, because check this out. If I just go to Thryv, I mean, most people, you got to think audience. I don't know who their audience is with respect to Keap's audience, right? Because if you go into industries here, you see a lot of service-based businesses, which, by the way, is Keap's primary target audience. Small business, service-based small businesses, right? But it starts to get interesting in the pricing, and when you start to bunch everything together. Now, look at this Business Center. You get your CRM, AI, review response, social media management, calendar and appointments, estimates and invoices, client portal, payment processor, local online listing. It's just a whole bunch of, to me, it's a whole bunch of stuff that you need to use. Where are you calling out that you can actually help me market, email market, do something, right? Social media management, enhancement, all of this. Now, this is just starting at, if I go and do a bundle, okay, the essential bundle starts at $456 a month. Run the numbers, that's over $4,000 a year. Growth bundle, $610 a month. Run the number, that's over $6,000 a year. Ultimate bundle, $7,000 a month, $761 a month. Run the numbers, over $7,000 a year. We're seeing, I don't see a price point that is appealing to any of the Keap customer base that they're acquiring. So my thought is, maybe they're purchasing that customer base, and perhaps instead of lowering these prices, what they're going to do is just try to maximize on the marketing side, the marketing technology that they just purchased, to tap into potentially a lower market, maybe, and just take Keap's profitability, feed them for the first year, and then maybe they start slowly integrating that technology into their offering. What does this mean? These, to me, look like HubSpot and Salesforce-esque numbers. So if you are a Keap user, go holler at Keap, your partner representative. See if you can talk to Clate. Again, I have no inside information, but I would be worried that whatever I was paying, I'm probably not going to be paying. I don't know what the software development cycle is going to be. Big trouble in Big China here. All right. There's smoke. There's smoke. And wherever there's smoke, there's fire somewhere that we can't see. They're reporting, oh, it's all good. Look, we're going to increase our gross margin. We're going to do this. We're going to do that. I think Clate may have done the best thing. Get his money in cash and bail out, because this is going to be very interesting. I'm hoping for the best. But I just don't see enough here to validate it. And to be honest, again, I hope I'm off. I do. And I hope that Keap comes back bigger and better. The software doesn't take a hit. No degradation in operating and effectiveness. I just haven't seen it happen like this. MailChimp got acquired by Quicken, but they pretty much ran. It's almost like they're still them under Quicken. I'm not a MailChimp user. or proponent of their software because it's just limited in terms of email marketing for my use case, but I know it's great for other businesses. But I don't personally have any good stories of companies of this magnitude getting acquired, especially for less than what they're worth, and it working out in the end. So we'll see. Breaking news just happened yesterday. I'm looking forward to learning from my biz dev folks and my other founders. They'll probably text me, chime in, help me understand. No, Chris, this means this. Actually, this. I'm here for it. I'll keep you all updated if you want. I mean, if this is the type of content you want to continue to stay abreast to, let me know. I'll make sure to publish some updates so that we can all be in the know. But if you're using Keap, maybe the indicator of migration has turned on just a little bit. Well, I don't think, again, this is not going to happen until Q4. You won't see the implications of this probably until 2026, if that, right? So this is not something like, oh my God, I got to get my stuff and go. It's something to be mindful of, though. All right, be mindful of it. And we'll just see. We'll see what happens. We'll see where this goes. It's the space. It's technology. It's where we're at. This is just it. So let me know your thoughts. Let me know if you know some other information. Let me know if I'm off on some of my assessment. Just keep us all in the loop.